Okay, welcome everyone to this session. This is the introduction to the ISDA LIBR Fallbacks Protocol. I'm the first speaker. My name is Ai Ping. I'm a counsel in the Capital Markets Department of Linklater's. So you've already heard that the first session was a deep dive into the fallback supplement and the quite detailed provisions of the fallback supplement. So what this session is really intended to do is to give you an introduction to the LIBR fallbacks protocol. Now, the supplement and the protocol really go hand in hand. And what the protocol answers is, what do you do about all your existing contracts? What do you do about your legacy trades? Is there a way to amend those legacy trades? So the ISDA LIBR fallbacks protocol really gives market participants a one-stop way to amend your legacy trades. So this is really what we'll be dealing with in this session. So what the session will cover is the scope of the protocol, and when the changes contemplated by the protocol will be implemented in your protocol-covered documents. And then the next thing we'll be looking at is, what are your protocol-covered documents? All of you will be familiar by now with ISDA protocols. The interesting thing to note about the ISDA LIBR fallbacks protocol is that it's the one protocol that covers non-ISDA documents as well as ISDA documents, and the speakers will be looking at that later on. And we'll also be looking at how and when market participants can adhere to the protocol and the quite complicated agency adherence process for the protocol, and then the ISDA amend process for agents. So really, the protocol was published on the same day as the LIBR fallback supplement, which is 23rd October 2020, and will be effective the same day as the supplement, which is 25th of January 2021. Right. And you've heard what the supplement does. The supplement, includes new triggers and fallbacks in the event of a permanent cessation of the IBORs, and for LIBOR on a pre-cessation trigger. And then you've heard about the fallbacks. And then you've heard that ISDA will have if particular tenors are discontinued for particular rate, the discontinued rates maturity provisions, which contemplate interpolation if one or more IBOR tenors are withdrawn or become non-representative. And you've heard the previous speakers talk about linear interpolation. So all these things will apply to your existing contracts by virtue of your adherence to the LIBR fallbacks protocol. Essentially, that's what the LIBR fallbacks protocol does. It implements the LIBR fallback supplements to your existing contracts. So new contracts that you enter into after 25th of January 2021 will obviously, include the supplement, and the protocol is really to deal with your existing book of LIBOR trades. So when will the changes included in the protocol come into effect? So the first point we have to deal with here is, a contractual one. So when contractually do the parties agree that the protocol will take effect? Well, simply put, when I submit an adherence letter to ISDA and when my counterparty submits an adherence letter to ISDA, then the agreement to make the changes contemplated by the protocol will be effective on the date that, ISDA obviously accepts an adherence letter from the later of these two parties. So that is what we call the implementation date. And the amendments that are brought in by the protocol are made to the protocol-covered documents, right, on the later of the implementation date and the protocol effective date. When's the protocol effective date? As we know, protocol effective date is 25th of January 2021. So how does that work in practice? So let's say that there are two parties, me and you, and we have submitted our adherence letters to ISDA before the protocol effective date. So this month, for example, right, then our amendments will be effective on the 25th of January 2021 on the protocol effective date itself. If, however, I'm, delaying, and I haven't signed up to the protocol yet, and I only signed up after 25th of January 2021, well, then the amendments that we have to our documents won't be effective on 25th January 21. It'll be effective on, on the later date, on the date that I submit my letter to ISDA. right? And so what effect does this have? It means that, any amendments made to the protocol will apply to the protocol covered documents, on the date that the protocol is effective to us. So it will apply to all our documents between us two on the date that, the protocol is actually effective to amend those documents. And note that if the protocol covered document is a master agreement, obviously the amendments apply to all the transactions entered into under that master agreement.
Hello, everyone. My name is Francis Edwards. If you don't know me, I'm the head of the derivatives and structured finance team for Greater China at Clifford Chance, and I'm based in Hong Kong. So what I'll cover now is what documents are within the scope of the protocol. So Haiming has explained how the protocol operates and the timing of that. And I think, what I'll do now is cover exactly what the scope is. And the key thing to focus here on is this definition of protocol covered documents. So the protocol will amend all protocol covered documents. And the concept of protocol covered documents has sort of three subsets. Protocol covered master agreements, protocol covered credit support documents, and protocol covered confirmations. Now, there's some overlap there, but I'll just sort of explain it further. In addition, and importantly, and as Haiping mentioned, this doesn't just cover ISDA documentation. It also covers non-ISDA documentation. And so Joyce will explain how the non-ISDA documentation gets brought into these definitions. I'll focus on the ISDA documentation for now. So to break it down here across the subsets, protocol covered master agreement, protocol covered credit support document, protocol covered confirmation. There's essentially three elements, and it applies across each of these three definitions in terms of what's covered. So the first thing is that if you have the ISDA master agreements. Now, there's a lot of ISDA master agreements published by ISDA, not just the 2002 and the 1992, but a French version, Irish version, etc., a 1987 version. All those are ISDA master agreements for these purposes, and all those master agreements will be covered as ISDA master agreements. You then look in terms of what's captured. If an ISDA master agreement incorporates what's called a covered ISDA definitions booklet, then it will be in scope. And what's a covered ISDA definitions booklet? Essentially, an interest rates definitional booklet, which is really the 2006 definitions, which are the ones currently used, and all their previous forms, so the 2000 version, 1998, supplement 91, etc. So that's the covered ISDA definitions booklet. If those definitions are incorporated, then this ISDA master agreement will be in scope. Secondly, if it doesn't actually incorporate a covered ISDA definitions booklet, but it references an IBOR, which is as defined in one of those covered ISDA definition booklets, then again, the master agreement will be in scope. And finally, and most broadly, if the ISDA master agreement incorporates a reference to any relevant IBOR, however defined, then that will also bring it into scope. So in other words, it doesn't have to refer to the definitions booklet or the exact precise defined term from the ISDA definitions booklet. And so just to give you a sense of this, what are the relevant IBORs? I think it's about 13 of them. It's sterling LIBOR, Swiss franc LIBOR, US dollar LIBOR, Euro interbank offered rate, Japanese yen LIBOR, Tokyo interbank offered, and Tokyo interbank, Euro yen Tokyo bank interoffered, bank bill swap rate, Canadian dollar offer rate, Hong Kong interbank offer rate, Singapore dollar, and Thai baht interest rate fix. So all those, any reference at all in any of these ISDA master agreements to any of those rates will automatically bring the ISDA master agreement into scope. Just to sort of be clear as well, this covers not just an ISDA master agreement that's been signed in the usual way, but also what we might call a deemed ISDA or a long form confirmation. So where an ISDA is deemed to come into existence by an agreement rather than actually the piece of paper being signed. The next sort of category is credit support documents, protocol covered credit support documents. So that's the same concept. This time it's ISDA credit support documentation. It's all the credit support documents, the credit support deed and the credit support annexes that have since ever been published by ISDA are in that list. And again, they use the same formula as I've just gone through for the master agreement. So you're looking at, do they incorporate a covered ISDA definitions booklet? Do they reference IBORs, which are defined in a covered ISDA definitions booklet? Or do they reference an IBOR in any way, what's called the relevant IBOR? If they do, then they will be in scope under the protocol covered credit support documentation. And finally, we have the concept of protocol covered confirmations. If you weren't captured already through your master agreements, your credit support documentation, if a confirmation itself, again, has those three criteria, then it'll be in scope. So if it's incorporating ISDA definitions booklet, if it's using an IBOR that's as defined in the definitions booklet, or if it's referencing a relevant IBOR at all, then it'll be captured. So you can see it's a very, very broad coverage. There's a couple of observations I think that are interesting here. I mean, firstly, it is covering such a broad range of IBOR references in any ISDA documentation. And I think it's something that will be considered a bit later on, but there will be considerations among market participants as to whether all documentation should indeed be covered. So the discussion, for example, that's being had is whether loan-linked ISDAs, where ISDA master agreements, hedging transactions entered into referencing loans, should also be covered by the protocol because of the risk of mismatches. So I won't go into that here. In fact, I think the panelists later will discuss that in the context of bilateral agreements, but it's just a point to note. So I'll just hand over now to Joyce to cover non-ISDA documentation.
Morning, everyone. My name is Joyce. I head up the legal and compliance team for Treasury and Markets in DBS. I'm based in Singapore. So let's move straight on into non-ISDA documents that are within the scope of the protocol. These are listed very helpfully in the annex to the protocol as additional master agreements and additional credit support documents. The helpful operative provision that would allow these to be swept into scope of the protocol is actually paragraph 6 of the attachment to the protocol. If they are protocol covered documents, which they are, that reference relevant IBOR, and you heard Francis talked about that earlier. The interesting thing that I want to mention about relevant IBORs, howsoever defined, is it do take some time, and I know the panelists earlier covered it, to work through the list of relevant IBORs that are specifically set out. So there is clarity then about which particular benchmarks and IBORs are covered. There are also helpfully covered IBORs in the sense that if they are generally described as LIBOR in a document, they would be covered by the protocol, or a LIBOR or relevant IBOR, howsoever defined, whether it's in the English language or otherwise. So it is meant to go from the very specific to the very broad, and the attempt here is to make sure we capture as many of these relevant IBORs as possible. Now, the key thing, another one to keep in mind in relation to the protocol, is that it will amend this huge set of documents that we've told you are set out and identified and listed, but that is all it will cover. So it will not extend to agreements that are not specifically listed. However, there is some flexibility that ISDA provides here, in that the parties can bilaterally agree outside of the protocol framework, but they can bilaterally agree that additional documents they want to be covered by the protocol terms. They want the protocol terms to apply to them. But you can do the opposite as well, in that you can agree bilaterally again outside of the protocol framework to say that actually I don't want certain of my master documents or my trade confirmations, as Francis mentioned, to be covered by the protocol, even if it is at first instance. So that is a useful thing, I think, for all of us to remember, that signing up to the protocol and adhering will obviously be a very great help to us in amending our legacy positions, as Iping has also said. But there is enough flexibility built within it that you can exclude particular trades and agreements if you want to from the scope of the protocol, but you can also agree, again, between yourselves that actually the protocol terms I'd like to apply to these other trade confirmations or agreements that, or credit support documents that are not within scope, but I and my counterparty would like them to be. So that's something to remember. Now, some of the examples I would like to take all of you through, most importantly, are the GIMRA and the GIMSLA. These are the master documents that cover repurchase, repo transactions, and the securities lending agreements, the GIMSLA. These are your stock lending and borrowing agreements. Now, they're very helpful to a lot of us in the financial markets in that as many OTC derivatives we may have, IRS trades, FX trades, a lot of us would have, as our institutions trade, repos and stock lending agreements as well. So knowing that these global agreements and some of the local jurisdictional versions are within scope, I think it's a very good thing for all of us. Some of the other non-ISDA documents that could be captured under the protocol by way of credit support documents, as you see on the slide, the 2007 FBAK collateral annex, your variation margin, VM CSAs, as well as several different jurisdictional versions. Again, you see the Swiss one there, but it captures, say, the Mexican version, your standard English law version. So it's worth taking a look when you have some time at the detail of these additional master agreements and credit support documents that fall within the scope of the protocol. Before I move on to the last couple of points very quickly, I do want to mention, it's not something we've written down in the slides, but do keep in mind that as helpful as the scope of the ISDA protocol now is, there are some trades that don't fall within it. Primarily, if you as an institution, a bank, or you are a corporate buy-side firm contracting with a bank, if you happen to have repo trades or derivative trades that are documented under bespoke terms that the bank offers, not an ISDA, not a GIMRA, not a master agreement at all, but just bank to counterparty. Sometimes they have bespoke terms. Those are not going to be covered by your protocol. If you have trades that are structured products, for example, a structured note of a structured note program, structured debt instruments, or cleared trades that you clear on a CCP like LCH, those are not going to be captured by your protocol. So do, again, pay a lot of attention, I think, to what is in scope, what is out of scope. And then that little helpful mechanism where you can carve out things and add things bilaterally as well. So moving on to that last couple of bullet points on the slide, I mean, ISDA's obviously made the effort to talk to the various industry associations in the different countries who own some of these non-ISDA master agreements and credit support documents. And they have consulted relevant jurisdictional counsel to an extent when they were drafting the ISDA protocol and trying to see if these additional documents can be brought into scope. So they have done some work in that sense to provide some level of comfort, but do be aware that each of us will need to be doing our own due diligence and will need to be doing our own assessment and analysis as to how effective adhering to the protocol would be. in respect of these additional master agreements or additional credit support documents. So a helpful piece of information that is on the ISDA website linked to the benchmark protocol page is a list of the trade associations as well as foreign counsel that had been approached by ISDA when they were working on the protocol. So if anyone has any further questions, they want to engage that counsel to look into something in more detail, or they need some extra comfort about how the protocol would be legally effective, any other things they need to do, any further steps they need to take to make sure everything is in order, you can look up that list on the ISDA website and reach out to that counsel yourself to get some extra advice if you need to.
Thank you. Great. Thank you very much for that, Joyce. At this point, I just want to, jump into the Q&As because we've been getting a few Q&As about the interaction between the protocol and the supplement. So one of the questions from an audience member is, does the ISDA IBOR protocol supersede the ISDA benchmark supplement? So no, they don't supersede each other. In fact, the two documents work very much hand in hand. So if you think about it, if you're entering into your IRS trade, you would incorporate your 2006 definitions effective as of the trade date. So the ISDA IBOR supplement will obviously be effective on the 25th of January 2021. And so for your trades entered into, on or after 25th of January 2021, they would be, they would incorporate your ISDA IBOR fallbacks supplement. Right. So all those trades going forward, don't need to be amended. They would just incorporate the supplement. However, for your existing book of trades, all of those entered into prior to that date, well, there isn't an easy way of amending those trades. Literally, you would have to either, amend those trades bilaterally, as other panelists will talk about later on today, or you would have to sign up to the protocol. And by adhering to the protocol, those would amend all your existing book of trades, as long as, as Francis said, you refer to an IBOR, a relevant IBOR or incorporate a relevant IBOR, etc. So they would amend your existing documents, your book of documents, on the date that the protocol is effective. So I hope that answers that question. So going on now to deal with how can I adhere to the protocol? Well, the protocol is actually open for adherence now. And you've heard Jing say earlier that as of today's date, we have about 740 adherents. So a wide range of entities across buy-side firms and, the major banks and central banks. So a huge number of people have signed up for it. And, real life story, yesterday I was preparing for this session and a client called me up going, oh, should I adhere to the protocol? What should I do? And, I encouraged him to go to the ISDA website, check the number of banks that were hearing, and he was persuaded. He was like, wow, so many people have signed up for it. I better sign up now too. So this client was actually an agent for a bunch of funds. And, I'll talk about that a little bit later. So anyway, this protocol is open for both ISDA members as well as non-ISDA members, wherever they are based, wherever they are located. So it's anybody can sign up to the protocol. There is no cutoff date for adherence to the protocol currently, though ISDA may introduce a cutoff date later on by giving at least 30 days notice. And how do you sign up for this? Well, it's very easy. I think we're all familiar with how you sign up to protocols. You go to the protocols section of the ISDA website, and it allows you to generate your own form of adherence letter, and then you sign the adherence letter. You don't need a wet ink signature. You obviously e-sign your letter. The key thing to note here when you generate your adherence letter is, as Francis and Joyce have said, that perhaps you need to due diligence your existing book of trades, because not all trades you will want to be amended in line with the supplement. For some trades, you may want bespoke amendments, for example, for hedging trades where you want to, match or, fit with the terms of existing loan or bond documentation. Of course, when you go to the protocol section of the ISDA website, it doesn't allow you to amend your adherence letter. It's, a simple letter that you would generate, and you can't amend it. And other panelists later on today will talk about how you generate bilateral amendments to your documents. And as to costs, whether there are any costs to adhere to the protocol, well, obviously, depends on what type of member you are. For ISDA members, you pay a fee, a very small fee, $500. Non-ISDA members don't pay to adhere prior to the protocol effective date, and after that, there may be a fee, either per entity fee or a bulk fee, as the case may be. So really, it's if there is a fee, it's $500 very, very well spent. So what is the agency adherence process for the protocol? And this is really what my client who called up yesterday wanted to know. If I'm an agent, what do I do? What do I do with all these funds that I act for? So really, for that client, what you'd say to him was, well, you can adhere to the protocol on your own account for all those trades that you may be principal for, but you can also adhere for the trades that you are, that you act as an agent for on behalf of certain underlying clients. So, there are three options available to agents. First option is simple, the simplest option, where you adhere on behalf of all your clients. So you simply submit an adherence letter. You don't carve anyone in. You don't put additional people out. You just simply submit your adherence letter, and then you will have, adhered on behalf of all your clients. However, if you don't want to adhere on behalf of all your clients, but only a certain selected batch of clients, the two options open for you. You can either adhere on behalf of certain identified clients only. So you would have to say who those clients are as part of your adherence process, or you would want to adhere to all your clients, but carve a certain bunch of clients out. So again, you would have to, as part of your adherence process, notify ISDA as to which clients you want to carve out of your adherence process. So if you want to do that, there are a couple of other steps that you have to go through. And how you would do that is literally by going through a platform. I think the speaker after me will talk about that. And that platform, will be, ISDA Amend, right? And you can also, the other thing you can do is also make an election regarding the type of documents that you want to amend. So obviously, if you're an agent, you can simply amend all the protocol covered documents that you have entered into on behalf of all your clients. But sometimes some clients can say, well, actually, I have other documents that I want to amend where you as agent haven't actually entered into those documents on behalf of that client. So the protocol gives sufficient flexibility. So for those documents, documents under which the client has entered into, but the agent itself may not have entered into for those clients, those are called non-agent executed protocol covered documents. And again, there is a space within the ISDA website for the agent to help the client adhere to those documents as well. And so obviously for agents who want to do that, well, there's a sort of double-step process. Firstly, you have to decide, are you going to adhere on behalf of all your clients or some clients, right? And if it's just some, you have to, submit an additional adherence letter. Are you going to adhere only for the clients that the agent has entered into for those clients, or other documents as well? And if it's other documents as well, then you have an additional step to go through on the ISDA website. So, that's, again, is a pretty simple process. And of course, you can enter into the protocol on your own capacity as well. And, just one more thing to note is that obviously there is a way for people to request evidence of authority. So, you can request evidence of authority for the agent, and you have, a set period of time for the agent to provide evidence of authority. I think that's 15 business days.
Just to address a question that's come in before we move to your section, which I know is key, but since it's related, there was a question coming in from the audience about whether a bespoke master agreement that references an IBOR would be covered by the protocol. It won't be. So the document has to be what is called the protocol covered document. So that definition is what Francis went through earlier. But those protocol covered documents includes these additional master agreements and credit support agreements that I talked about. That in them reference the relevant IBOR. So it's conjunctive. They need to have both elements to be covered by the protocol. So if you have a bespoke set of terms that any of the other banks, Citibank, JP Morgan, even DBS, had entered into a separate OTC derivative agreement with you, that is not one of these agreements listed in the protocol. Even if it references a relevant IBOR, you would need to make your bilateral amendments. It won't be picked up by the protocol. So adhering to that won't amend those bespoke terms and conditions if you have any, even if they do happen to reference relevant IBORs. I hope that was helpful. Thank you, Ming. I apologize for taking a few minutes of your time.
No, definitely. That was thank you very much, Joyce. Hi, everyone. So I'm Ming Chung, the Director of Reg and Compliance at IHS Markit, looking after the counterparty manager ecosystem. So if I can just go back to this slide. So just a little bit about ISDA Amend. So Iping has mentioned, you can leverage this platform around how to complete the agency workflow. So let me just show you quickly. So those of you who are not familiar, ISDA Amend is part of our regulatory hub within Counterparty Manager ecosystem that allows clients to exchange tax, CRS, KYC, onboarding, and more importantly, a lot of regulatory information on a single portal. So the ISDA Amend itself is a collaboration between us and ISDA, and it's started around 2012, where the early days of Dodd-Frank took place. And if you can see on the chart displayed right now, it really kind of shows at the 12 o'clock mark where we first started the regulations with Dodd-Frank. And if you go anti-clockwise, you'll see that it covers throughout the last 8 years. We've been working very closely with ISDA and the working groups of digitizing certain rep letters and protocol information on the system. Some of the big ones being, cross-border representations, Dodd-Frank protocol questionnaires, and coming to, more Asia specific, you've got things like ASIC clearing, Hong Kong clearing classification, in Singapore, MAS risk mitigation requirements, and so forth in there. And, not to forget the most recent one and what we'll be talking about today is the ISDA Amend IBOR protocol. And really, this platform is a utility-based approach. So it allows the buy side to log in once, complete the regulations, the representations, and then through a permissioning module, allow you to select the different banks and brokers that want to see that information. So it's pretty straightforward. Just complete it once, and you can share the same information across your different banking relationships. So if I go on to a quick walkthrough of a demo, it's really just within here, the design language and the user experience is around getting the clients to come in, complete the work and task item, and very seamlessly walk you through the different steps to complete that so they can go on to the next step. So as you can see on here, the first step is a 3-step process. So first, apply the adherence ID that you'll get from ISDA.org. So once you've entered that into the platform, the system will then walk you through the next steps. And the type of adherence, as Iping mentioned earlier, would determine the work item that you'll have on this platform to complete. And then secondly, you just complete the list of your entities or your clients for protocol. So for option 1, and then the same again for option 2. And both of these are independent of each other. And one of the main important items here is really the same process across all your other regulations. So if you're already using ISDA Amend, your entity list, your clients list and information is already available through other regulations that you can just apply very simply. If I move on to the next step. So as I mentioned, the first step is really around adding the adherence ID. So we're connected to ISDA.org. So once you've adhered, you'll get a unique identifier. And within the platform, you'll select the investment manager or the parent name that is in question that you need to adhere to. And then you can quite simply just enter the adherence ID on here. And as you can see, once you hit save across the middle of the screen, you'll be able to see it connected and informing you what type of adherence you have selected. And in this case, we have option 1 and option 2 both available. Again, option 1 being if you want to select specific funds that you want to incorporate in this protocol, or you can actually exclude certain funds or clients within that process. And you can also choose for option 2 as well on here for your non-agent executed agreements. None of these are independent, so you can complete them as required for each one as well. So as we move on to the next step, and you can see we've got a few screens here, but essentially it's pretty straightforward. As I mentioned, either you're a new client on the system that you can then create a new list of your clients that you want to include or exclude as part of the list. You have options to save that information, so that list can be reused for other regulations as and when it's required. And you simply just select them from the list. If you already have existing entities, you'll have them on the bottom left-hand corner where you can just select the names that you want to be part of, either included or excluded, save that, and then once you hit next, you can see the next step is really just to add your counterparty permission. So you can select for that specific list which counterparties are needed to be included. And that's really as simple as that. Option 2 follows exactly the same process. You select the names of your clients and then select the counterparties that need to be applied. We have bulk upload features that make this a lot easier if you're a large agency, with many different clients. You can simply upload Excel files that will, generate those items. So if I just move on to the final one, from a bank perspective, your workflow is actually much more simplistic because you're not needing to nominate all of your clients' names and so forth. So really, you have one single report function within ISDA Amend that you can download and get the information across all the clients that have permissioned you within that information. We've also added some really easy workflow tools within there that both the connection into ISDA.org that you can pull in the adherence information based on the adherence ID. We're also connected to the Glyph database that allows the validation and the checks on the LEIs of the names that you get as well. So makes it, everything centralized in a single report opposed to having to look through client by client information there. So I know that's all I really wanted to walk through today. So if I'll put it back to the group and address any questions that may come in as well.
Hi, thank you, Ming. It's Ping. Just to answer one question that's come in from the audience, can you elaborate more regarding the fees, the ISDA, the fees for adhering to the protocol of $500 US? So what I encourage people to do is go to the FAQs on the ISDA website. So ISDA has quite comprehensive, pretty long FAQs, and look at section F of the FAQs, which talks about fees. The fees state that for ISDA primary members, the adherence fee is $500 US. For non-ISDA primary members, there's no fee before the adherence date, the protocol adherence date, but after the protocol adherence date, the fee is $500 US. For funds, there is, a different system. So for funds, you can get like a bulk adherence fee, and there is an email that you can email, and that's actually in item F of the FAQs. So if you're adhering on behalf of a fund, please go to that section of the FAQs and, and email the contact details there. Thank you.
I think just to add to Ping's response, which was great, might be stating the obvious, but if you're not sure if you're an ISDA primary member or not, there is a list on the ISDA website as well. So look for ISDA members or ISDA membership if you need to double check whether you or one of your affiliates or subsidiaries are members. And I believe affiliates and subsidiaries that benefit from their parent being an ISDA primary member, when they adhere, they also will need to pay the $500 fee. But as Ping said, the details are in section F of that FAQ. Hope that little extra tidbit is also of help.
We got a question. Last minute question. Hi, is it mandatory for most banks on 2006 ISDA to subscribe to the protocols? That's a very good question. I mean, obviously, it makes it a lot easier if you're going to subscribe to the protocol, because you simply be, implementing your supplement in a one-stop way. But as Francis and Joyce have said earlier, the key question for you is, well, that probably works for most of your day-to-day ISDAs, but for some of your ISDA trades, those that hedge particular loan portfolios, or those for bespoke documents, or those that entered into to hedge notes, for example, as we all know, even in the notes world, the fallbacks have been developing in a really different way. So, you've got ARC language, which is different. You've got the new APLMA, drafts, which have come out, which, are quite different. So if you're hedging those particular loans, you might want to carve those particular trades out of the protocol and supplement, and do a bespoke amendment. And I hope that answers the question.
It does make it very obvious, I think. Ping and Francis and Ming as well have mentioned it, that if you haven't made a start, please do as quickly as possible. In relation to due diligence on your portfolio, if it makes it worth your while, whether you're a bank or a corporate, because you have a big enough book of derivatives that are affected, and therefore adhering to the protocol is going to be helpful for you to migrate and amend your legacy trades without doing individual bilateral amendments, then that may be the way to go. But there are these other, I don't want to say outliers, but we all have trades out there that hedge loans and bonds and were entered into for very particular purpose, perhaps in the past, that you might not want the protocol terms to apply to. And by the flip side, there may be trades you have that you want protocol terms to apply, but are not covered. So then you also need to go and do bilateral agreements, which will be covered later, that will help you do that. So it is pretty key to get to know your portfolios very well, and start engaging with clients if you're a bank, to try and work out whether they also should be adhering to the protocol or not in relation to their trades that they happen to be doing with yourself.
From the audience, all these questions coming in. So Joyce just mentioned that the only protocol covered documents will be amended by the protocol. What happens if we have confirmations under bank bespoke master agreements that incorporate the LIBR FBAK definition under the 2006 definitions? Will that confirmation be amended by the protocol? I guess the first, I think the response to that is no, because as Joyce mentioned, it's only protocol covered documents that are amended by the by the protocol. So for bank bespoke, mini master agreements or, private bank mini master agreements, you're going to have to put in bespoke changes to those documents.